What up, everybody? It's Lonnie here with Charts and Labs. I know I made my stocks video this morning. Let's get back into a TXC one this afternoon. It is Friday the 19th. God, next week is Christmas, yeah? Um, let's start off by saying this is not financial advice. This is just educational purposes only. I'm just sharing you guys my opinion and my experiences in markets, whether they be stocks or cryptos. So that you have a familiarity that you're comfortable with making decisions on your own to grow your personal wealth. Um, I've been following TXC for a while, and it's kind of my highlight crypto that I am. Community reached out to me and made it apparent that we needed to make some of these videos to help people see some things. And um, what we got going on is a big downtrend. There has been some doubt and uncertainty that has spread with a lot of things that are going on. It's not all one thing specific. There was a macro storm of events that kind of led to a perfect storm that created this downtrend opportunity, and some are nervous about it. So I hope that this can kind of help you. One who is, if you are invested already or an active miner in this project, that you gain some confidence that this is going to continue. And if you need some help shedding some light for somebody who is new to the project, knowing that this is exactly what happens in cryptocurrencies, and it's not solely just because TXC is in a vacuum. It is kind of caused by everything. So what we have on this chart is this downtrend channel that we're in. We see parallel lines on a pretty even gap going down, and we see the test, pause, test. Might even see another test if this continues. We have the all-time high breakout, test. So this little parallel channel, we're looking to break out of this. These horizontal lines are the famous path to 16 that everybody is so adamant about. There was a lot of people who sold others on this path to 16 of, hey, buy now and you're going to be able to sell in February for 16, just give me your money, and didn't back it up with what was happening and what was necessary for that to happen. Price does not depend on the calendar. Price depends on liquidity available. And if you look at the path to 16 on that page that went around and is shared virally and was used by so many people as a selling point, everybody looked at the left-hand side of that page, seeing the dates and the price, and that was exciting. And as TXC progressed from January to October, each one of these was their goal. This is June, July, August, September, October. 10 consecutive months TXC hit that price target, hit that milestone goal. Sales were great. Price was going up consistently. And that made it very easy to bring on new people, because the only pitch you needed to do is look at this. This is a roadmap to the price that is going to be. It's a guaranteed free money, and that guarantee is not honest. What people didn't share is that the whole right side of that page was the number represented based on how many sales were generated, and how much dollars from those sales was going to go into the liquidity to support the price. It was a test to see if the market agreed with that valuation. The path to 16 is a milestone goal that the community, or TXC as the project, would like to see the coin at that price, because that shows the value of what's being built. Now, a couple things are going on where the mine itself is actually behind schedule and being built, and that is also hurting the value a little bit. There has been some major steps in recent months, in the last 2-3 months, of major progressions with the mine is being built at a much more steady pace, and this is a very, very positive thing, especially on the heels of layer 2 becoming a possibility. The mines being built is not for the network itself as far as regards of the coins being allocated to the miners. The mines being built is establishing the value of what the network is, and the utility that would be in what the network can provide as far as community currencies, downtown digital dollars, and other tokens that can be used on the layer 2 on the network. That utility is going to create the value based on these mines being sold. If it's purely just about creating the coins, stop building the mine now. That's going to be the thing. We're already beyond enough to get enough of the coins. The value in this bigger mine is a bigger network. So that's why we need to see these mine sales being progressed to keep up with the mine development so that we can get to this potential build of what this project can reach. So a real popular tool that a lot of people are using to try to break down and do research is ChatGPT or Grok or any of these AI bots. And that is a phenomenal tool. You should 100% use it. The issue is if you don't know how to use it, it's like driving a semi when you don't have your CDL. It's a powerful tool and can be 100% beneficial to helping somebody research. The problem is if you sway it with your words or if you don't train it. The thing that most people don't know about these AI bots is you have to train them. One of the things that I did with mine is I made sure that it did not focus on Reddit articles of others and it leaned on facts. So one of the first commands that you can give your AI is when researching, do not use Reddit opinion articles and rather focus on finding facts from accredited sources and real articles. So I strongly recommend everybody doing that if you are using your AI, ChatGPT, Grok, or whoever for research. So let's see what I did because everybody likes to use their AI to show why TXC is wrong. Let's look at why TXC is okay and not in such a bad place that everybody is so concerned about. I let it know, hey, each one of these horizontal lines were monthly milestone goals, November, and I let in the numbers of what each one was. And this was called the Path to 16. That was goals from the liquidity earmarked for mine sales to the liquidity to support the market. January through October, 10 and 10 goals were met. November was a tease early in the month where the nudge was attempted from late October into November, but it failed. But was failed and never reclaimed. Outside sentiment was that the failed price goal was from the lack of money and a sign of failure. October and November sales were down from the September high, and we can go look at MineTXC website to see that. September was the highest of the company. It was growing exponentially until the fall off of TXC, but not quite a sign of failure because they are still steady. Both October and November were very consistent, and December is on track to be along those lines, maybe slightly better. We're down from September, not a failure. So I'm letting it know that I think that the macroeconomic status caused this slowdown. The market has extremely thin liquidity for TXC. That's 100% fact. There are not enough active traders in this market. Majority of the liquidity is provided through TXC's mine sales and a very few amount of people who are active in adding to their coins that are already miners. And it's being such a new project, we're mined from zero, and all of those coins are mined off network, off exchanges. The only way to get them on exchanges is from providing the liquidity to entice people to sell them. And the selling is needed, so there's always going to be a pull back before the move forward. Just something to be mindful of, that you got to see the pullback before forward because the selling has to happen first before it can go up. Whereas like a coin like XRP or somebody who was fully diluted at release, there was no mine, it was just all there. The first thing that has to happen is a buy. So it's kind of the opposite in that regards. TXC, the first thing that has to happen is a sell. There's also some macroeconomic events. The end of October was a big shift in all of the tech and other risk assets as the Japan Bank decided that they needed to raise their rates to a 30-year high. If you're not familiar with the yen carry trade, you could look that up. Make sure your ChatGPT doesn't rely on Reddit for that, and it will tell you a little bit about what was going on. Banks and lenders were using extremely low interest rates from Japan to borrow money convert it from yen to dollar, and buy equities and bonds in the US market, driving the stock market and cryptocurrencies and other assets extremely high. Now that the Japan Bank decided to raise their rates, now people have to sell those risk assets, which are always the first to be sold. You don't sell your gold and silver first. You sell your high risk, your Bitcoins and your cryptos. You sell your tech stocks like your Nvidias and stuff who have that big profit. Sell those first and then go pay off your loans and debts, and then you kind of rebalance and see what money you have before you end up having to pay a higher interest rate. Now they have to kind of reallocate all their funds in their investment portfolios, and crypto is being rebalanced right now. So Texacoin is not in a vacuum; it is part of that. As though even though it's on the bottom and not in the top 20, not in the top 100, is not immune to macro events. Market has extremely thin liquidity, so the pause in buying pressure met with consistent selling pressure has led to this exaggeration and downtrend. That's my personal opinion. I don't see that the selling pressure or anybody has really been dumping. Through this chart, through all of it, even though that the selling pressure has outweighed buying pressure, I don't think it's ever been an increase in selling pressure. My personal opinion is that it's been a decrease in buying pressure, and selling has just kind of steadily been building. So I wanted to see if that's kind of what ChatGPT saw also. That consistent has exaggerated this downtrend. Do you see this true, knowing what you know about TXC and its peers? Because we're talking about Litecoin, Doge, Bitcoin, and the other proof of work mining coins. Short answer is yes, your interpretation is broadly correct, and the outside narrative failed goal equals lack of money failure is an oversimplification that ignores the liquidity mechanics, timing, and macro conditions. Below is grounded, disciplined assessment based on what you've shared, what the chart shows, and how thin liquidity proof of work projects are behave relative to their peers. So the path to 16 was structurally sound until liquidity timing changed. What that means, January to October, hitting 10 out of 10 milestones is not random and it's not luck. That implies that there was consistent execution of the plan and how everything was functioning. The sales were met, the liquidity was established. It was a predictable market response when the buy pressure was applied. The functioning feedback loop between mining revenue, liquidity providing, and price discovery. That alone invalidates the idea that the model was fundamentally broken. The failure in November was not a cascading failure, not a structural breakdown, or a loss of internal discipline. It was a timing of environment failure, which materially different. November was the first real stress test that was met, and it coincided with macroeconomic headwinds. A lot of those I just told you about. Risk assets all broadly slowed or were sold off. Crypto inflows were rotated towards the Bitcoin and the major players. There's a lot of ETF inflows where banks and others are adopting the major cryptos, and all the focus is in them, not in the altcoins. Small caps and liquidity dried up across the board, not to just TXC alone in a vacuum. It was everybody. The speculative bid depth collapsed faster than sellers exited. Sellers were still present and buyers vanished much quicker than the sellers paused. The buy pressure paused. Sell pressure never does. This is common across all markets. People are consistently selling the coin, especially when it's something that is mined off network and then needs to come on network. That is a proof of work kind of binary code to what it is. The thin liquidity is amplifying the downtrend. This is not unique to TXC. Price does not equal value. Price is equal to the last aggressive trade. Small, steady sells can overpower absent buyers, and this is exactly what I see happening with TXC. It is not major dumping. It is not, early adopters losing faith and then just getting out of the project. It is just the fact that there are steady sellers, but there are not steady buyers. Market structure exaggerates trends in both directions. So once we get bullish and things go forward, should accelerate very quickly because of the same things that cause the price to go down very quickly. What we're seeing with TXC right now is not a collapse. It is volatility expansion to the downside caused by an imbalance, not panic. There's no major dumping going on. Again, I'm going to reiterate that over and over probably. This matches exactly what you described earlier in your execution logs. Repeated small sells materially moved the price. Order book depth was fragile. If we look on Bitmart or some of these other ones, they'll actually show you, and most of the time over the last month or so, the sell orders has been two to one, overpowering the buys. And even if and then even the buys that are present were always typically market orders very low in the price, causing those sell orders to hunt for those buy orders, causing the price to go down. View up degraded quickly with activity. That same dynamic is now playing out at market scale. The November failure became a narrative inflection point, psychology over fundamentals. This is where perception overtook reality. Externally, people were simplifying the story. They missed the price target, must be out of money. But the actual causal chain is more accurate. Buy-side liquidity slowed from a macro and rotational influence. Sellers continued at their normal pace. Thin books exaggerated the move. November target failed after being teased. Confidence narrative flipped. As soon as the people got spooked a little bit and that euphoria ran out, it magnified the way down. The sellers started to become more aggressive as they were worried about getting of not being able to get out of their position or not be able to make as much. Typically, that went from that they're looking to try to get $500 a day, and now they have to sell twice as many coins to get there, or whatever their goal was. The liquidity support, if reduced or delayed, could no longer overpower the flow. This is where the market makers on Bitmart and MEXC and Biconomy were overrun by the sellers. This is a reflective sentiment loop, not a capital insolvency signal. We're not TXC is not going anywhere because of these signals. If anything, it's been smart that they paused on injecting the major liquidity, trying to push the price up, because now the prices came and find a balance. There has to be free market support before the move can happen up next. This is exactly why I said that the October, November, that last week of October, first week of November, that test of 5 was a complete botch move. I wish they didn't do it. I've been against it the whole entire time, and I'll tell anybody that. And trying it multiple times was foolish. There needed to be a full rescale of seeing where the free market was before trying again, and it should have even been met in stages, I feel. That's here nor there, but this now it's to the point where it's like, okay, hey, let's see where the market is. And the market right now is not looking to push the price up to even support a nudge. So any kind of nudge right now would just be sold into with sentiment being down. Sentiment has to flip. Bullish has to be the strength. Buyers have to have the power. And then a nudge can be supported. So if we're going to compare TXC to its peers to strengthen your case, when you look at the familiar proof of work adjacent projects, infrastructure first coins, I don't know why he keeps calling me. I don't know, wrong number. If you see the same pattern in Q4, strong, all in small cap utility tokens with thin books. These are what TXC's peers are. You see the same pattern in Q4. Strong runs earlier in the year, peaks around September, October, failure to reclaim highs in November, exaggerated drawdowns in December. TXC is not an outlier here. All of its peers are doing the same thing, and that's what we have to make sure that we are taking into account for, is that TXC is not on an island with this. Looking at the chart specifically, the chart confirms structure failure, not a model failure. Technically, what failed was a descending channel resistance reclaim, not long-term accumulation structure. This is where there hasn't been enough support built, and this is why the market is building from the bottom all over again, and it needs to build before the nudges can happen, or the nudges need to be much smaller and not 40% cycles. Maybe they need to be 10 or 15% or 20%. This is not a network fundamentals. There's not production capability. Once the November level, that 530 failed, trend traders exited. Everybody saw that there was a 40% gain every month and it was easy money, jump in, jump on, and ride this train to free money. As soon as that failed, a lot of those guys are like, hold on, now this requires either an investment stake where I don't know how long it's going to be till I get my money back, or I need to, buy, hold, and let the project build. There's plenty of people who are putting money in this solely to milk the liquidity and just take that 40% gain month to month and move on. So those guys are kind of stepping back because now they need to go into something that has more liquidity, that's more regular and balanced in its trade. TXC can still be that. There just needs to be more liquidity added to the market from inside and outside both, where people are willing to invest and put some money into it, to kind of build these order books and have some consistency with the buys. Um, no new buyers replace them. That's the key on why those traders gone, and now we're looking for buyers and there are none. A lot of people are still learning how to use these exchanges. A lot of these people that are into this TXC project, a lot of them have no familiarity with crypto at all prior to this. Not a business failure. Market structure. Where the outside critics are wrong. This is for everybody who's having a hard time with the naysayers on Facebook who are jumping for joy for this opportunity. I've been around all the cryptos. I've been around stocks. One of my favorite examples is Intel. I like Intel a lot as a tech stock, and part of their downturns recently was from their previous CEO. Price went down and it's starting to recover. There's a lot of hype and positivity with what's going on with them. But they've positioned themselves long term to be one of the best tech companies in the world, and they are a computer well recognized in-house name. Well, anytime that they have a decent downturn or anything, all the message boards are filled with Intel's going bankrupt because they suck. AMD's better, Nvidia's better, Taiwan Semiconductor's better. All the other names they want to spit out and spew is because they're FUD. They're either paid accounts to shill negative news to drive sentiment down, or they're egotistical people who are just looking to be able to say I told you so and have no skin in the game. If whatever negative they say is wrong and proved wrong, they don't come to you and be like, "Ah, dang, sorry, I was wrong. I'm glad you didn't listen to me." Every one of them will tell you that you just got lucky, or the project got lucky, or still don't think it's a good play. So make sure to know your sources of who and what their reason is. A lot of them are just talking to just be able to say, "I told you so," and praying that you fail, which is just weird human nature. But so anyway, outside critics are wrong. The critics assume that liquidity support was an infinite or static move. The missed target means no money. The downtrend means abandonment. In reality, the liquidity is conditional and strategic. There has to be mine sales in order to provide the liquidity. The money can't be printed out of thin air. Pulling back during macro weakness is rational, not failure. If every other crypto and every other proof of work coin and every other project was all flying right now and TXC was the only one dropping, I would be a lot more concerned. There is a lot of doubt in not just crypto, but in equities, the economy. There's global tension rising across the board and everything. There's world wars on the edge. We have trade wars and all kinds of things going on. And then it's the holidays. People have to put money towards their families. It's winter, there's utility bills and stuff that have to be provided for, and there's family first kind of mantra. And TXC or any kind of speculative investment, especially the most speculative investments that as a new project company or crypto or any kind of project, the more speculative they are, the more risks they have. You need to make sure that there is your risk taking is after all of your home is provided for. Once the home is secure, then you can look at what you have available to take on a speculative risk like a new project like TXC. You're not gonna risk rent money on a project like this. So, that slowdown is what's kind of causing the total slowdown of the project. Pulling back during the macro is not failure. Thin markets punish pauses, not just mistakes. Again, the buying paused. That's why we're in a downtrend, not because people are more frequently selling. If TXC had kept forcing liquidity in November, the risk would have been wasting capital into weak macro flow. This is exactly why we just said that there was the smartest thing to do for Bobby was to stop pushing in the liquidity. Pause, get the sales up, build the liquidity pool back up. Even if we have to take some of the whether it's real estate, the silver, gold, or any of that needs to be reallocated into this, it should be 100%. I'm on board with that, but not right now. You don't do it now. The market is weak. Wait till there's bullish strength and then push. Let momentum build and then push. So until the free market decides that we need to go 140, 160, 180, 220, 250 and re-get back into that very bullish trend, then bring in the liquidity to help push the price through those resistant points and go into new price discovery and let the momentum build. So don't want to waste the capital. That would be a larger down draw and a longer down draw. Training the market to expect bailouts. Yeah, we don't want to let people think that if they throw a fit and threaten stuff that they're gonna take money and throw it into the liquidity so that they could sell into it, because that's what people are doing. The people that are kicking and screaming are looking for a bailout because they either bought too high or they need the money and they over invested in something that they can't sit and hold. If you're making investments in speculative risks like this, it needs to be something that you, one, are capable of losing, two, something that you're capable of letting sit for a while. It's higher risk, less reward. If it's something that you need to be able to go back into and get right away, or you're expecting a promised return, you should have been in bonds. Take your 4% and just cash in every 2-3 months or whatever. Those are your promised goals. Invest in bonds, not in crypto, if you need the promises. Not doing that, arguably disciplined choice, even versus optics. So yeah, 100%. Don't bail out everybody just because they're kicking and screaming. Core truth. Your thesis can be summarized cleanly like this, and this is what I'm going to leave everybody with. TXC did not fail because it ran out of money. It failed to meet a November price milestone because of thin liquidity, macro slowdown, and persistent selling pressure exaggerated a temporary pause in buy-side support. That is a credible, defensible explanation, and it aligns with both the chart and your execution data. If you want me to do more of these, I can. I'm not going to jump into those. This is all I really wanted to talk about. Everybody likes using ChatGPT. Just make sure you're using it the right way. If you want help trying to train your ChatGPT so that you can utilize it the best way possible, I will give you what I did and how to use it and help you train it. But always make sure you're utilizing your tools properly and train it. So, quick look at this. Low volume as ever. We see this trailing volume. This is exactly what I'm talking about. It is not an increase in selling pressure. It is a decrease in buying pressure. And until the market steps in and says that 140, this 140 is too low, buy, pushes it back to 2, buy, there's no support. The free market itself needs to establish a new uptrend. This uptrend is not built on the liquidity support. And if it was TXC as the only buying and the only providing, eventually that's a snake eating its tail, and it's going to run out. You cannot do that. You cannot rely on that. There has to be a free market of buyers and investors who are willing to step in and buy this. We're still above this. Wouldn't be surprised if it's tested, and it wouldn't scare me if it was. But if you don't want to see $1 again, and you want to see this project grow up, make sure you're part of providing the liquidity and putting money into this. Again, not financial advice. I'm not telling you what to do with your money. It is your choice. But if you're wanting to see the price go up, you have to be willing to buy it at 140 if you want to see 150. You have to buy it at 150 if you want to see 160. You have to buy it at 190 if you want to see it at 2. And you have to be willing to buy it at 15 if you want to see it at 16. So those that are wanting to see the path to 16, make sure you're willing to put a little bit of money in it, and it doesn't take much. It really, really doesn't take much. If you really believe in the project and you support TXC and what it's capable of doing, and you see the same potential that I see in it, then all of these prices are great buying opportunities, no matter what they are, because you're looking at it at 8, 10, 12, 25, 16, whatever number it could be. because I wasn't planning on selling it at 3. I wasn't planning on selling it at 4, and I wasn't planning on selling it at 5. Um, the whole point is to build the mine and build the project, and we're 30% bought, and hardly like what 2% installed or whatever, something like that. Um, it's going to get going, and as we see these mines come online and start seeing that go up and the network stability go up, I personally already have one token ready to be run on the layer 2. I have another one in my mind that I could have up by January. And these community currencies are going to be big. Texas is a very proud state. It is the perfect state for this as an opportunity to run these and keep the currencies in the community. That's the whole point of it. Keep the money within the community. Build small business. I'm also a small business owner. I love supporting small business. Nothing against you, Walmart and Costco, but if I could ever go to a mom and pop shop, that's always going to be my first choice. So if you support small business, you kind of support TXC in a way, because that's the end goal. And if your goal was to sell at 380, I'm sorry that it's under that. But if your goal is to sell at 10 or 12 or 20 or 25 or 16 or whatever, you know, take advantage of the opportunity that is my opinion. But again, it's not financial advice. It's your money. Just have faith and hold on. There's not really anything that's too concerning to abandon ship, but there's going to be plenty of naysayers. Negativity echoes the loudest in the darkness, and anytime that there's a downtrend, they come out of nowhere for no reason just to yell. So let them yell, and if they're right, they're not going to help you. And if they're wrong, you're not going to help them. So who cares? But if you have any questions, you want me to dive into anything specific? I didn't get to touch on the stocks, the options that I traded today, but it was a pretty good day. Hoping that next week I can keep building that at a similar pace. I should be able to buy some TXC next week with my profits and follow along on that challenge series. That should be fun. And I need you guys to keep me disciplined and making sure that I stay on track and don't go crazy gambling 0-day options. So have a good one. I hope this little walkthrough lets you breathe a sigh of relief a little bit, and knowing that the project is still on track and is still a success story in the making. So let it be, and have a good weekend, everybody.